What if I told you there's a company trying to completely change the way people buy and sell homes? Turning one of the most stressful experiences of your life into something as simple as clicking a button. That company is Opendoor Technologies, ticker symbol OPEN, and in 2025, it's not just a real estate disruptor, it's also one of the hottest meme stocks on the market. But who are they? What do they actually do? And why has Wall Street and retail investors suddenly turned their attention back to this company? Let's break it all down. Who is Opendoor? Opendoor Technologies was founded in 2014 with a mission to transform the housing market using technology. The company was started by Eric Wu and a team of entrepreneurs who believed the traditional process of buying or selling a home was outdated. Think about it. Endless showings, multiple offers, paperwork, waiting weeks for appraisals and inspections. It's a process that hasn't changed much in decades. Opendoor set out to digitize it. Instead of going through a traditional real estate agent and listing process, homeowners can go directly to Opendoor online, request an offer on their home, and in many cases receive a cash offer in just 24 hours. That instant liquidity is the core of Opendoor's model. The company uses what's called an iBuying model, short for instant buying. Here's how it works. Opendoor purchases homes directly from sellers, makes light repairs or updates if needed, and then resells them on the open market. They make money on the difference between the purchase and sale price, plus service fees. It's a business that relies heavily on technology, algorithms to determine fair home values, data analytics to assess market conditions, and a streamlined platform to make the whole process faster and easier than traditional real estate transactions. What does Opendoor do? At its core, Opendoor's product is convenience. Instead of waiting months to sell, a homeowner can go online, enter their property details, and within a day or two, get an all-cash offer from Opendoor. No open houses, no agents, no staging. The seller can then choose a closing date that works best for them, sometimes as quickly as a week. For buyers, Opendoor lists these homes on its platform, creating a simplified buying process. Because the company owns the homes it sells, it can offer unique flexibility like self-guided tours through the Opendoor app, financing options, and reduced friction in negotiation. Beyond just buying and selling homes, Opendoor has also expanded into mortgage services, title and escrow, and partnerships with home builders. For example, if someone wants to buy a newly built home, Opendoor can purchase their old home instantly, freeing them up to move quickly. It's about creating a seamless, end-to-end real estate transaction ecosystem. How has the company performed? Opendoor went public in 2020 through a SPAC deal backed by venture capitalist Chamath Palihapitiya, one of the most high-profile figures during the SPAC boom. At the time, the company was hailed as the future of real estate. The IPO gave them a market cap in the tens of billions, and for a moment, it looked like Opendoor might truly replace the traditional real estate agent model. But then came the housing downturn. Rising interest rates in 2022 and 2023 crushed housing demand. Mortgage rates soared, affordability dropped, and suddenly the iBuying model looked risky. Opendoor was forced to sell many homes at a loss, and competitors like Zillow even shut down their iBuying businesses completely. Opendoor's stock price plummeted from double-digit highs down to under $2 per share at one point, leading many to write them off as another failed disruptor. Why has Opendoor become a meme stock now? Fast forward to 2025, and Opendoor is back in the headlines, not necessarily because its fundamentals have dramatically improved, but because it's become a trending meme stock. Retail traders on platforms like Reddit and X, formerly Twitter, have targeted Opendoor as a stock with high short interest and a beaten-down valuation. Exactly the kind of setup that fuels meme stock rallies. The logic is simple. If enough retail investors pile in, they can trigger a short squeeze, forcing institutional investors to cover their positions and drive the price higher. And it's not just hype. There are a few real reasons people are watching Opendoor again. Housing market stabilization. After years of turbulence, the housing market is showing signs of cooling but steadying. If mortgage rates ease, Opendoor's model could become more attractive again. Lean operations. Opendoor has spent the past 2 years cutting costs, improving its pricing models, and focusing on fewer, more profitable markets instead of expanding too quickly. Retail investor attention. In the meme stock era, attention itself can move markets. When communities online coordinate, the stock price can jump in ways that don't always reflect underlying fundamentals. Speculative growth potential. Some investors still believe Opendoor could become the Amazon of housing if it cracks the code on scaling iBuying profitably. So the recent surge in Opendoor's stock is a mix of speculation, meme energy, and a little bit of cautious optimism about its long-term potential. The risks and challenges, of course, it's not all upside. There are real risks that make Opendoor controversial as an investment. The housing market is notoriously cyclical, and Opendoor's business depends heavily on housing prices moving in its favor. If prices fall, the company can end up holding inventory it can't sell profitably. The iBuying model itself has been criticized as too risky because it ties a company's balance sheet directly to unpredictable real estate markets. There are also questions about scalability. While Opendoor can operate profitably in select markets, can it really expand nationwide and compete with entrenched real estate agents, online listing services, and new competitors? Finally, investor trust has been shaken. The huge losses during the housing downturn left a mark, and it's not clear if Opendoor can regain the same level of credibility it had during its IPO hype cycle. Why people care? At the end of the day, Opendoor sits at the intersection of real estate, technology, and retail investor speculation. It's a company trying to disrupt a trillion-dollar industry while also being pulled into the meme stock spotlight. For some, it represents a bold vision of a frictionless housing market. For others, it's a risky bet that hasn't proven itself. But either way, Opendoor has captured attention. And in today's market, that's sometimes all it takes to send a stock soaring. So that's Opendoor, a company trying to reinvent the housing market while also becoming a magnet for meme stock traders. Will it become the future of real estate or just another overhyped disruptor? Time will tell. Thanks for watching Finance Spot. If you enjoyed this breakdown, make sure to hit the like button, subscribe to the channel, and ring the notification bell so you don't miss the next episode of Stocks Explained. Drop a comment below. Do you think Opendoor has a future, or is this just another meme stock bubble waiting to pop? See you in the next one.